Good evening, guys. You are welcome once again to another of our videos. I hope you have been learning a lot from our videos which we have been posting. So you can always talk to me, send me a message to my WhatsApp. My number is down there. So today I just want to recap what we did last week. Remember, we picked a sell, and if you can see the chart clearly, you will see that I am on a losing $10.41. So the reason why we picked the trade was because it had broken away from the trend, from the channel. If you watched the last video, you would know what I'm talking about. Actually, it broke away from the channel, came back into the channel, and has broken a trend line which helped it to break the channel. And we expected it to at least come to the 50% of this yellow rectangle, and there is a liquidity point down there, so pretty much it's going to want to go, but then it's on sideways. That's why I want you to remember what I said. I said the market is predictable but reactive. If you understand what that means, it means the market, you don't predict what the market could probably do. You don't do that. You only react. Your reaction is what you have seen the market react to. That is your reaction is going to be your trade. It's either you buy or you sell. So if you are buying, you are reacting to what the trade has reacted to. For example, now on this particular market that has dropped and went back up again, there's an analogy which would expect this market to go higher if this last bullish candle closes above the open of the previous red candle, the bearish candle. You get? Because this is like a ranging point in the market. If you understand what I'm saying, a ranging point in the market. The market dropped, took liquidity, and came back up. So this is supposed to be a buyer's market in normal terms, if this last candle should close above the open of its previous candle. So now the market can also be funny. It can go up, probably come to this white line over here, come to this white line, or even get to the pink one over here, and you see it start reversing massively to the downside, breaking all the so-called and whatnots. Anyways, I just wanted to show you how the market behaved when it got to that particular the yellow rectangle, how it behaved in the lower time frames, for you to know how you can actually pick your trade when you want to pick your trade. You don't just pick trades based on what has happened in a single time frame. You pick your trades based on the reaction of the market on lower time frames, not just the higher time frames. Anyways, now looking at the market, as you can see, this is sort of a clear accumulation. Yeah, clear accumulation. The market has been coming. The market has been down, made this low, went up, made a high, made this huge low down. After that low, it made another low. After that low which it had made, it made a very, very beautiful high. I hope you see the high. I hope you can see the high. Okay, yes, as you can see, it broke this previous high. So after that, it crashed down. It crashed down. Guess what? There's a trend line on the higher time frame. There's a trend line, and as you can see, it's manipulating that trend line. It's seriously manipulating that trend line. It wants to go up. It has given us a sign of strength. But then this crash, does this crash break below the previous low? Who knows? No. So that's a secondary test. That's a secondary test. Okay, so it comes down, it gives a secondary test, goes back up, sort of creates liquidity, or does it? Okay, I don't think this should be called, okay, liquidity. We can call it liquidity. Who knows? Anyways, after liquidity, it went up. It went up and took that liquidity, and now it's back up. It's back up. I don't know if you are seeing this correctly the way I am seeing it, but right now it's back up. It made this low, made this high, came to this low, created liquidity, made this high, grabbed liquidity, and it's sitting on a structure point right here. It's sitting on a structure point. If it breaks below the structure point, probably it's going to start going into our proposed direction. But if it doesn't, and it gives a buying pressure from this structure point, I want the market to go up. I want the market to go up and start breaking highs, like breaking highs. So you understand? So let's just say this is our preliminary support, our seller's climax, liquidity, spring, and kaboom, we are off to the moon if that's what happens, because nobody knows what's going to happen in the market. So that's what I'm saying. And today's video is actually about Wyckoff. If I didn't tell you the topic from the beginning, it's about Wyckoff. So everything I just said right now, it's accumulation on Wyckoff. Remember accumulation, which I said when it's coming down and it starts giving signs of buying momentum, it's telling you that the market wants to keep going up. So what's going to happen with gold? Are we going to close our sell position? What's going to happen? Let's just watch and see. Take care and have a very, very beautiful week.